Market analyst and trader Jared Dillian joins us today. He had a great 2024 in the global stock market, with investments in Argentina and India driving returns, along with a big year for gold, and he traded bond volatility. Today, we're going to take a look back at what worked for him. We're going to look forward and see where he sees opportunity post-election and what sectors he's staying away from. I'm Ed D'Agostino from Malden Economics, and this is Global Macro Update. We're back with the one and only Jared Dillian. Jared, I wish I had Big Mo to introduce you. Did you watch the Tyson fight?
No, I mean, I heard plenty about it. I heard it was kind of a bust, but I didn't watch the Tyson fight. I
tried to watch the Tyson fight, but I just got the spinning wheel of death for until I couldn't stay awake any longer. But the best part, I went back and watched it. It was a bust. It was kind of a bummer, but the best part of it was the announcer, Big Mo. Just the voice, just so much fun to see him introducing people. It's awesome.
There's an announcer for the Charlotte Hornets named Eric Collins, who a lot of people don't know about because the Hornets are a small market team and they're terrible. But Eric Collins is the best basketball announcer in the game. And whenever somebody makes an amazing play, he literally stands up and yells at the top of his lungs, "Chicken salad deluxe." It's like his thing. And he says like, "Hey diddly dee," and like he has all these sayings and stuff. It's incredible.
He's incredible. Your fun uncle.
Yeah, he's really good. Yeah. So I like watching Hornets games.
Awesome. All right. Well, today I want to get into some predictions with you. I want to do a real quick look back, talk about what worked that maybe surprised people, some predictions for what you see coming up in the markets, and I want to talk a little bit about the concept of Costanza, because you tossed it around like everyone knows what it is. Everyone knows the character from Seinfeld, but Costanza has become a very important term in finance that I think we need to unpack. So, with that, let's dive into reverse for a second. Talk about some things that worked for you this year, 2024, that maybe were a little off the radar. Argentina is a great example.
Yeah, that seems like 3 years ago. Like I can't believe that's 2025. Yeah, I'm actually, what's funny is, so I think this goes back to 2023. I picked Milei very early on as the winner of that election, and it was close. And there was a poll a couple weeks before where Massa was ahead and it didn't look like he was going to win. But he won and markets were up a lot. What's funny is I actually, even though I mean, the percentage returns on that were ridiculous, I'm actually most sad about that trade because I panicked out of it. And if I had held on, I would be up even more, So I forget when so we were long GGAL and YPF, and it was when I was moving. It was about, I think it was back in May. The stock started showing a little bit of weakness and I panicked out of it. And now it's like 70% higher since then. So I kind of feel bad about that. But it was a great trade.
It was an epic trade. I mean, you still were triple digits on it, if I recall correctly. Yeah. Well, nobody goes broke taking profits.
Oh, I know, but that, I wish I hung on to that.
All right, well, let's talk about something that you have hung on to forever, and that's the yellow metal. What a year you've had this year.
Yeah, I mean, gold, it's pulled back a little bit. I want to say it's up 35% this year or something like that, which is going to be interesting because at the end of the year, we have to recalculate the awesome portfolio, look at the awesome portfolio returns. And the returns of the awesome portfolio are going to be amazing this year, with gold up, stocks up, bonds at least sideways to slightly up, real estate up. I mean, the awesome portfolio is going to be up, guessing 15 to 20% this year.
Can you explain just the very basic construct of the awesome portfolio for anybody who's not familiar?
Yeah, 20% stocks, 20% bonds, 20% cash, 20% gold, and 20% real estate. That's the awesome portfolio. So, I mean, it'll be up less than the stock market, but that's kind of by design. It's supposed to be less volatile than the stock market. But 2022 was the worst year for the Awesome portfolio in history. And it was still only down 12%, but 12% was minus 12% was the worst year for the Awesome portfolio since 1971.
How did bonds factor into that?
What, in 22?
Yeah, so in 22 and then in this year in 24.
Yeah, in 22, I mean, treasury bonds were down, like the AGG was down close to 20% in 22, and it was all off duration. This year, I'm just guessing. I don't know what the ag is. I'm guessing it's up like 3 or 4 or 5% or something like that is my guess.
I want to do one more look back because I know people are going to want to hear about. People like to look forward, and they should. But I can't resist talking about one other call that you made. I don't know if this was not. I wouldn't say it was consensus, but it wasn't on everyone's bingo card, that's for sure. And that was the incredible rip in the Indian stock market.
It's pulled back a little bit since then. So basically what happened, I mean, India went on an incredible run. And then what happened was you had the Chinese stimulus and everybody piled into Chinese stocks. And if you're an EM investor, if you're putting money in one place in EM, you're probably taking it out of somewhere else. So India had a 10 or 15% pullback from the highs. But this is the best way that I can describe India. It's kind of like Reaganomics combined with the dot-com bubble. Like you're getting the most favorable business political environment with rapid technological growth all at the same time. Like I have some subscribers who look at India and they say, well, it's overbought, and I'm like, you're not really getting it. Like this is this is a once in a lifetime phenomenon. As long as Modi is in power, which he just got reelected, so another 4 years, like this is going to continue into the future.
India, the last time I looked, somebody's going to get mad and correct me, but roughly speaking, I believe India's GDP is still somewhere around a quarter to a third of the size of China's. So still quite small compared to its potential. And yet it has passed China as the most populous country in the world. And it's still growing. And you've got China staring at a demographic cliff. So their demographics are like the West.
All demographic cliffs, like they're totally hosed. Yeah. That one child policy is coming back to bite them. Yep.
So I'm a big bull on India. I'm with you.
Yeah, and also, we have an ETF in the strategic portfolio called FRDM, Freedom, which has been in the strategic portfolio, I want to say, for like 4 or 5 years now, and it's done pretty well in the context of EM generally not doing so well. And the idea of the freedom weighted index is that it weights emerging market countries according to the freedom in their economic and social policies. So freer countries get a higher weight and less free countries get a lower weight. And the index basically excludes Russia, excludes China, excludes all the bad actors, and it has Taiwan, it has Korea, it has India, places like that. So Poland. So it's that's obviously done by Perth Toll. She's done a great job with that ETF, and that's a great way to invest in emerging markets.
Let's look forward a little bit. I guess the first thing I want to chat with you about is just we're coming off of this period where we had the most predicted recession of all times. That never happened, or it hasn't happened yet. And it seems like most of the recession bears have capitulated. How are you feeling about the economy?
Well, I was one of the recession bears, although I had a pretty good reason. I was predicting a recession in early 2024. The data really slowed down in the end of 23. The bond market rallied a lot. Interest rates came down. It seemed like we were going to get a recession, and then Deus ex machina, like no recession, you know. So the interesting thing is that, I mean, we got to talk about the election. So Trump just got elected, and in the first couple of weeks after the election, the market basically was pricing in 4 years of up and to the right growth, right? And stocks have kind of faltered since then. And I think people are coming to the realization that a Trump administration is not necessarily friendly to big business. We've talked about capping credit card interest rates. What else have we? I mean, we're talking about regulations on food companies and pharma companies. This is a populist administration. We're talking about breaking up big tech, which the Biden administration was trying to do, and JD Vance will probably make sure it gets done. I saw the other day that they want to get Google to get rid of its Chrome browser, sell it to somebody else. So, this is like if you have Google, Pfizer, Johnson & Johnson, McDonald's, all these mega cap stocks in your portfolio, this is not good for these stocks. It's not good for the index. And I think people are slowly starting to figure that out. This is not a free market administration, really. I mean, the only respect in which it is taxes. And from a tax standpoint, Trump has said he wanted to make the TCJA permanent, those tax cuts, 2017 permanent. But I wouldn't be surprised if we don't get anything beyond that, So I don't really share the bullishness that a lot of people have, Also, just the sentiment around U.S. outperformance over Europe and the rest of the world has just gotten off the charts bullish. I've seen all these tweet threads on how Europe is a third world country and they have all these regulations and they can't grow and stuff, which is all true. But usually when sentiment gets this focused on something, it's right at the moment that things begin to change. Not saying that I would really buy Europe against the U.S. at this point, but it's, that sentiment has gotten out of control.
There's a few other things we should touch on with the election. On the one hand, I mean, you brought up Milei in Argentina, and if you look at what that guy has been able to accomplish, and talk about the deck being stacked against you, right? Argentina is a big country, and at one point it was one of the wealthiest countries in the world. And you go to Buenos Aires and you can still see it today. I mean, it is just a stunningly beautiful city. And you could tell it was incredibly wealthy at one point, and parts of it still are incredibly wealthy. But after decades of Peronism, you would have thought that Milei would have run into a wrecking ball with regard to bureaucracy and entrenchment. And he's having a huge impact. I mean, inflation is single digits, if I read correctly this morning. I mean, that's amazing. So one determined politician can have huge impact, and maybe that is some of the optimism that some people, not everyone, but some people are feeling.
Well, Nassim Taleb wrote a piece. It was in the Skin in the Game, but I think he did it as a Medium post before it ended up in the book. And he talked about the tyranny of the intransigent minority, right? How basically, change doesn't really come. A lot of people operate under the assumption that change happens when 50% of people, 50 plus 1% of people change their opinions on something, and then you get social or economic change. It's actually not the case. It's when you have 1% of people who are pushing for social or economic change, who are intransigent and determined, that's when change happens. You know what I mean? So that's what's happened in Argentina. And by the way, so inflation is not, annualized inflation is not single digits. Monthly inflation is down to 2.4%. which is about 30% a year, and before was 200% a year. So it's come down dramatically. Milei said when he was running that he wanted to dollarize the economy. He hasn't done it yet. I don't know if he's going to do it. They still have a bunch of capital controls and stuff, which need to go away. He needs like 20 years in power to undo all this stuff. But my guess is at this point he gets reelected because, people are doing much better than they were before.
Half the country feels like that needs to happen in this country, right? And half of Americans don't think that. Or maybe it's 52-48 after the election. I don't know. But what do you think about Doge, about the Ramaswamy Musk partnership to squeeze out inefficiencies from the government? Do you think they're going to have success? I think we both think it's a good idea in principle, but do they run into a buzzsaw, or do you think they can get something done?
I mean, Elon Musk is a buzzsaw. I don't have a very high opinion of Vivek. I think he's kind of a talker, not a doer. I think this is really on Elon Musk. Elon has said he wants to cut $2 trillion from the government, right? So right now we spend about $6.5 trillion. We take in about $4.5 trillion. So we have a $2 trillion deficit. So theoretically, if we cut $2 trillion, we would have a balanced budget. That's fine. But the problem is, as most people know, the budget is mostly taken up with Medicare and Social Security and defense and interest on the debt. And that's like 85% of the budget. So you can cut a few million underperforming government employees, and I think you should do that anyway. And you can save 100 or 200 billion, but that doesn't get you to $2 trillion. And you don't cut $2 trillion without making radical reforms to entitlements, which Trump in the campaign said he wasn't going to do. He said he wasn't going to touch Social Security. What we really need to do is raise the retirement age. That needs to happen. But no politician is going to touch that. Maybe Trump will. He's not running again. Like, who knows? But that's what needs to happen first and foremost. And I don't really know how you make cuts to Medicare without really squeezing the private sector, which I don't know about Trump's willingness to do that.
In France, Macron tried to raise the retirement age, I think, by a couple of years, and people started burning cars in the street.
Yes.
It just gets some really angry middle-aged people. Social Security wasn't meant to last you for the last 30 years of your life, but that's where we're at now. If you retire at 62, you're probably going to live into your 90s. The other thing that probably needs to happen, just in case we haven't offended half of our audience, we will for sure with this comment. Social Security, the reality is it's going to, at some point in the future, it's going to be means tested. I mean, it's not going to be there for everybody because it can't be.
Yeah. I mean, look, there's a number of ways you can fix it, or some combination of ways. You can raise the retirement age. You can means test it. You can raise the tax rate, or you can raise the ceiling on the tax. You can raise the tax cutoff, or you can get rid of it altogether. You can do all these things. I don't really want my taxes to go up, so I hope that doesn't happen. But Social Security in the 1940s, you had 40 workers paying for one retiree. Now we have 3 workers paying for one retiree, and by 2050, that's going to go down to 2. And a lot of this comes down to demographics, the demographic cliff that you talked about with China, like we just have a declining birth rate, and people just live longer, provided they don't have a drug overdose when they're 30. If they stay healthy, they live into their 80s and 90s. To me, I'm 50, right? The idea that I can retire in 12 years is bananas. That is bananas to me, that I would be able to literally collect Social Security in 12 years. Nuts. Absolutely nuts. I mean, I'm not in like amazing physical health, but I'm fine, and I'll be fine when I'm 62. Like, I can work. It's crazy.
Yeah.
So.
Yeah, and part of it is what you do too, right? Like you and I, the reality is we're in a car, we're on a plane, or we're behind a desk, and it's a relatively comfortable life. That's just the reality of it. I have cousins who are electricians and who are, I'm 56, they're around my age, and they're getting beat up. They've got some aches and pains. So, when I talk with you and John Malden, who just turned 75 and has no intention of retiring, and we all live kind of that similar lifestyle. But there is another cohort out there that they're busting their hump, and it's different. So, but again, that could be a form of means testing. I'm not advocating for it. I'm just looking at the situation and saying, this is unsustainable. Like, nobody wants this. I would like to get Social Security someday. I paid into it my whole life. But and reality aren't always the same.
I don't think means testing really saves a lot of money, though. I think that's really more symbolic than anything.
Really?
Yeah, because let's say you said, okay, anybody with more than 2 million in assets doesn't get Social Security. Like, that's 10 or 15% of people. Like, it doesn't really do a lot from a monetary standpoint. Like I said, I think it's mostly symbolic, means testing it. So, I mean, Ken Langone, that's like his hobby horse. Like, he says this all the time. Like, why the hell am I getting Social Security? I'm a billionaire. Like, I shouldn't be getting Social Security.
In the comments below, I'll put my address. We're off on a big tangent here with politics, but let's go a little farther. What do you think about a value-added tax? That's one of John Malden's suggestions, and again, it drives people nuts because they say, well, why, you can't add yet another tax. You're opening the window a crack. The government's going to go right through it. And those are all valid criticisms, but the value added tax, the thing about it, in many ways, I would prefer it to an income tax because you can't evade it. You just can't hide from it.
Yeah, it makes enforcement really, really easy. I mean, you can fire 90% of the IRS. You can enforce it with like 6,000 people. Yeah. I would rather have a consumption tax. Would much rather have a consumption tax. Great. We pay a 25% sales tax or VAT on everything, right? Terrific. You want to buy a $100 million yacht, you pay a $25 million tax, right? Like, it applies to everything. So, but like you said, you cannot, and look, this is, Grover Norquist says this all the time, right? Grover Norquist is head of the tax foundation, and he's very much in favor of lower taxes. He hates the income tax, but he would never advocate for a consumption tax until you repeal the income tax, right?
Sure, and I think that's fair.
Because if we introduced a consumption tax, now we have two parallel tax systems that will inevitably go up over time. And then we become like Europe. You're paying 40% income taxes and 25% VATs at the same time. Like, it's the worst. Right?
But you have free health care.
Yeah, that's not going to happen here. That's not going to happen here. But yeah, no, consumption taxes are better. Like, if the thing with taxing income, if you tax something, you get less of it. So if you tax income, you get less work, right? If you tax consumption, you get less consumption, which everybody likes. Everybody wants people to consume less. That's ideally what you want to do. If I could go back and like travel back in time and assassinate Woodrow Wilson before he passed the income tax, like, I would absolutely do that.
Jared Dillian, Terminator. I like it. That's a movie theme. We should work on this.
Yeah.
All right, let's talk about what we do during the day. Try to figure out how to make money. 2025, You've put some ideas out there already. It doesn't have to be the beginning of the year, but just starting now, post election, you've identified some areas that you think are going to be winners. We talked about some losers. Let's talk about some winners. And broker dealers is one area that you've written about recently that you think has great potential under this administration. Why is that?
Yeah, I mean, my concern is, look, like, I picked a broker dealer stock in my newsletter in Street Freak and the Daily Dirt app. And I think it's a good pick. The problem is it's run up a lot already. Broker dealers are the second best performing sector in the S&P this year. So they've already moved quite a bit. Having said that, if you go back to the financial crisis, if you go back to 2008, like the regulators have been basically using the banking industry as a piggy bank for the last 16 years. They'll do some kind of inspection or audit. They find that people were using WhatsApp. They find the industry like $3 billion. They have some other records violation. They find them $300 million. Like they must, I don't know what the total number is, but the government extracts billions and billions of dollars out of the banking industry every year. And that's going to stop under Trump. That's going to stop. So that is for sure a good reason to get bullish, not even the only reason.
You think that extends to banks, JP Morgan?
Oh, yeah, absolutely. Yeah.
Okay. How about the dollar, US dollar? It's been a wrecking ball. I've heard you say you think it might be time to sell it.
Yeah, I've been saying that for a while. So even before the election, I was like, look, like if Trump gets elected, he spent his whole first term like jawboning the dollar down. JD Vance on the campaign trail said he would do the same thing. He actually kind of hinted at currency interventions to get the dollar down. He kind of hinted at that. So I literally, like, everybody said that Trump getting elected was strong dollar. Like I don't understand it at all. Like I don't understand it. And the dollar has ripped like 10 or 12% in the last 2 months. It's been an unstoppable freight train. It's just kind of slowed down in the last couple days. But I am super bearish the dollar. I am super bearish. I think the dollar goes much lower.
If you're an individual investor, and a lot of people who read you are market professionals, but if you're an individual, how do you play that?
There's an ETF called UDN, which stands for dollar down, which is most platforms don't even have it because it's got very small AUM. But that is basically buying a basket of currencies against the US dollar. But I wouldn't even screw around with that. If you think the dollar is going down, just buy emerging markets and buy commodities, right? Like buy an emerging markets ETF, buy Freedom, buy FCX, buy commodity stocks, buy energy, buy basic materials. Like basic materials in particular, like XLB is super correlated to the dollar, right? So negatively correlated.
How about energy? What are your thoughts on energy?
I don't really know. I mean, energy stocks are up a little bit since the election. There is, I've been watching the price of oil. I don't know. I mean, I was like foaming at the mouth bullish like 3 months ago, and oil traded from like 67 to 77, and now it's back down around 68. And I think that the market is excessively bearish. But yeah, I don't really have an opinion at the moment.
Has Kennedy been confirmed?
No.
For an official position? Okay.
No.
So but health and human services, I would guess would be the direction that he would go if he had his choice.
Oh no, he's been appointed to HHS.
Oh,
Yeah,
he has.
He just hasn't
Okay.
been confirmed yet.
Okay,
Yeah.
he hasn't been confirmed, but Trump
Yeah.
nominated him. Okay,
Yeah.
it's happening rapid fire. So that
Yeah.
one fell through the cracks for me. So if that's the case, assuming that he gets confirmed, there's some things you probably don't want to own.
Yeah. Yeah. This is like an easy one. Like you do not want to own pharmaceutical companies, especially the vaccine makers, especially Pfizer. Like it was kind of funny because on the day of the election, banks were up 10%, 12%, energy was up, all this stuff was up. And Pfizer, like the market was up like 2.5% that day, and Pfizer was unch. Like it was just obvious. Like it did not participate in the rally at all. Yeah, RFK Jr. Like I said, like this is an administration that is not necessarily going to be friendly to big business, and in particular pharmaceutical companies. I think there's a huge amount of downside here.
I don't know who makes Doritos, but they're probably not a top long either.
Yeah, all that stuff. I like Doritos. I could actually, it's funny. You just, now I want Doritos. You mentioned that.
So that's how addictive they are. That's
Cool
what
Ranch.
All right. Well, let's talk a little bit about. Do you have any out of the box predictions? Something kind of way off center that you think people might want to think about at least for next year?
All I'll say is, have you been paying attention to what Josh Hawley is doing in the Senate?
A little bit.
So he is. This is a Republican, okay, and he is in favor of capping credit card interest rates. And literally before I walked in here, I saw a video of him on Twitter, like berating the CEOs of Visa and MasterCard, calling them monopolists. Like I have to make this point over and over again in our talk. Like this is not bullish. This is not bullish. Like this is potentially, we have elected an administration that is less friendly to business than Kamala Harris would have been. Now, Kamala Harris would have been worse in a multitude of different ways. We would have had higher taxes for sure. Maybe that unrealized capital gains tax, like a lot of things would have been worse in other ways. But honest to God, I think Trump is going to be worse for your portfolio than Kamala Harris or Biden would have been.
I mean, if you had said to me, guess which politician just said this about credit card companies and interest rates, the obvious answer would have been like, well, Elizabeth Warren,
Yeah.
Bernie Sanders,
Yeah.
not Josh Hawley, or maybe not a Republican. So it's bizarro land right now for those of us that are of an age and we're kind of that, like when you looked at Reagan and Clinton and thought there was so much difference, but the reality is they were the same thing, just the same shirt, different color. Not a lot of difference. Those days are long gone. I'll give you my prediction. My prediction is much more simple. I think this year is going to be the year that, and I don't know which company it will be, but somebody is going to come up with a massive breakthrough in quantum computing.
It seems like we're close to that.
I think this is the year. I think 2025 is the year that it happens.
Yeah.
I don't think AI unleashed chaos. I think it unleashed fear of chaos in certain areas. I think quantum's going to be the real deal. Like quantum is going to be like, okay, all of the sudden, passwords are a huge issue. Massive upside and massive change that will come from it. That's my prediction.
Yep.
So
I like it.
we'll replay this in a year, see how bad I did.
Yeah.
I guess last thing, there's hints that there's something going on at Jared Dillian Money for your flagship letter, Daily Dirt Nap. So, and I've been told we can't talk about it.
We can't talk about it?
Yeah, that's what I was told. Don't say anything, but I can't resist. You know, I hear there's going to be a big offer coming for the Daily Dirt Nap next week. And and that people should sign up for your letter, the Jared Dillian letter, to find out more about it. So that's my subtle plug and my rule break for the day.
So where do people go to sign up for the Jared Dillian letter?
Go to jareddillianmoney.com. You'll see an opt-in to sign up for the letter. Free letter once a week that you write. It's great. Market commentary. But there's going to be a big announcement next week. So I'm looking forward to getting the details.
I'm looking forward to that. Yeah.